Sophie Cameron there in Hong Kong. Well, Southeast Asia's largest lender, one to watch when Singapore gets underway today, I should say. Reporting strong earnings numbers this morning that matched analyst expectations. DBS posted a higher third quarter profit as lending incomes climbed. Bad loan allowances also eased. For more, I want to bring in now our Bloomberg Intelligence senior analyst, Diksha Gira. What's been driving this outperformance, I guess?
Yeah, hi dear, very good morning. I think the Singapore Bank's earnings outlook remains quite robust. I mean, even on the stock price performance, if you see, OCBC did a fair bit of catch up this year, up 10%. Part of it is obviously the margin performance because the margins went up 5 basis points vis-a-vis a flat year to date for that bank. And even with DBS, there was a 1 basis points margin uptick this year, which kind of brings back markets' confidence in terms of the earnings growth led by the interest rate rise, I think.
Is this, I mean, we always ask, is this sustainable, right? Or is it kind of as good as it gets at this point?
I think I'm very positive on the Singapore Bank's outlook still. If you look at it, just the performance, we're looking at about a 15 to 30% profit growth for the year, which is quite robust and quite steady given how markets are volatile. 3 key factors that are driving it. One of them obviously being the net interest margins that I just talked about. The second one is the wealth management business. So we've seen like market performance has been a little bit weaker this year, which has kind of hurt portfolio performance. But the AUM growth is very secular upward trend. And that kind of positions them to benefit once the markets pick up from a fee perspective. And thirdly, and the most importantly, is the asset quality side of things. Singapore banks have a very stable outlook still on earnings and asset quality, which is a big edge above their emerging market cousins who are kind of, facing risks given how things are shaping.
So what about their dividend prospects then?
Yeah, Sherry, very true. I mean, the dividend outlook for the Sing banks is also quite promising. If you look at their regulatory capital, they're north of 13%, basically well above the 12.5 comfort zone that, banks would want to look at this point in time. And just in terms of their willingness to pay up as well, like we saw DBS give out a 50 basis point special dividend this year. So OCBC and UOB, they have pretty comfortable regulatory capital levels as well, but they might look to beef up some of their businesses inorganically. So, but irrespective of that, we are still looking at a 3.5–4% dividend yield, which is quite comfortable in this market.
Diksha, what about India's largest lender, SBI, reporting tonight? What can we expect?
Yeah, so SBI is likely to report a loss again today, though the magnitude of the loss should be lesser than the 48.8 billion they did last quarter. Predominantly, it's going to be driven by higher provisions because they're still in the process of resolution of bad loans. And also, we could see some weakness from the treasury side of things as bond yields have risen a fair bit. The one bright spot that I can think of is basically the net interest margin outlook. So SBI has the best deposit franchise, and that should help its margin outlook.
Diksha, thank you so much for that. Bloomberg Intelligence senior analyst Diksha Gira joining us from Singapore. SoftBank is set